Hey guys, I hope you are doing well today. My name is Kenisha Haye, and I am a licensed real estate broker and owner of KHE Realty here in the Jacksonville area. And so guys, today I'm coming like very informal. You know, I wanted to come as your girlfriend or as your neighbor, just giving you some insight on the home buying process. I started to really go back into my memory of when I first purchased my home, and you know, the fear that I had and I experienced not knowing what I was getting into, you know. And I get that a lot from people when they're inquiring about purchasing a home. They're like, I'm scared, I'm nervous, I've never done this before. And that is truly understandable, guys. Understand, I do this every day, right? I am a realtor and I do this every day. You guys have your occupations that you're great at, and so therefore it's understandable that you may be nervous going into this new endeavor in your life, which is purchasing a large transactional item that you've never done before. So I understand, and that's where I come in at, guys, to help you throughout the process. Like I say, I do this every day. I am a full-time real estate agent, broker, owner of my own real estate company here. And you know, guys, what I like to lead by example. Here I am selling real estate. I would think that you guys would want a realtor that have been through the process before, right? And I'll let you know, I've done this 5 times already. I've sat where you guys have, where you're sitting at currently and trying to purchase a home. So I understand that the underwriter comes with these different things at the end of the transaction, and you're pulling your hair out like, what more do you want from me? Let me take you through this process smoothly, and let me show you that it's not as terrifying as some may put it, or what you may be thinking that it is, guys. I broke it down into 5 different parts, right? 5 easy parts for you to follow. And so what I have with me is my buyer's guide here. You guys are welcome to get a copy of it. It should be a link down below that allows you to go ahead and fill out the information, and then you'll get one of these buyer's guide to you. That way you can rewatch this video going over the home buying process with you, right? And I won't take up too much of your time, because talking about it is one thing, going through the process is a whole nother thing. So I can talk about it a lot right here, but trust me, as you're going through the process, you're going to have more questions. But the good thing about going through something like this right now is the fact that you'll have this information that you can always reference to. All right, guys, to begin, right, I would say the first thing I like to tell people to do is prepare. Prepare, guys. You're saying you want to purchase a home, right? Prepare. Get yourself a licensed real estate agent that knows the area that you're looking to purchase in, right? Know about the home buying process, right? So you find you an agent that's reliable and that is going to take you by the hand and lead you through this process, all right? And so with that agent, when you get with an agent like myself, one of the first questions I like to ask people is, how much money do you have saved up to purchase a home? You know, guys, believe it or not, I get it a lot. People ask, or people would say, oh, I didn't know I needed money to purchase a home. I thought that, you know, we'll go through the process and I'll ask the seller to pay this and then that's it. And guys, that is so far-fetched from the truth. I am here to let you know you do need money when purchasing a home. And this prepare phase of it is where you'll detail with your agent how much money you need to purchase, guys. So for me, I like to first find out from my buyers, what type of loan are we going to use, right? You have the VA loan. So that's for our veterans or our active duty military personnel. They're able to use the VA loan, which is no down payment, right? You also have the USDA loan that is no down payment as well, and that's more for the rural areas, right? And then you have what is called the FHA loan and the conventional loan. The FHA loan requires a 3.5% down payment, and the conventional loan requires a 5% to 20% down payment. Once we are able to locate the type of loan you're going to use, then I'm able to say, okay, if you're looking to purchase a home that's $200,000 and you're going to use your VA loan, you don't have to worry about doing a down payment. However, if you're going to do an FHA loan and the home is 3.5%, then therefore you're going to need to save up 3.5% of what that $200,000 is, which is going to equate to about $7,000 for that down payment. And then guys, you also have the cost of your closing costs that you need to factor in. And the closing cost is traditionally about 3 to 4% of whatever the sales price is. So I like to say whatever your down payment is, just double that, right? So you'll need that for down payment and closing costs. So if it's $7,000 you need for down payment, you're more than likely going to need about $7,000 for closing costs, right? Now your down payment and closing costs are needed at the end of the transaction, right? So that's not monies that you need like right away. However, since we're preparing and we're planning, we're gonna go ahead and get that taken care of and have inside the bank account, honey, so we're not scrambling at the end to get that. And I also like to point out that you're able to borrow funds from family members or gifts from family members to help with your down payment and closing costs. Now, if that does occur, we'll need to speak with your lender because each lender requires different documentations. Let's say if you got a gift from your mom or dad, they'll ask them to write a letter for that gift amount that they gave to you. Just to make sure we talk about that up front. If you know that a family member is going to help you out, just know in advance that we're going to need a gift letter. Alrighty. Also, we have what is called the in-transaction fees, right? And this is the part that a lot of people miss. That while we're going through the transaction, yes, you're going to need funds, guys. Because first of all, once we write up the offer and we go on the contract, we're going to need to turn in what is called the earnest money or binder. So some areas call it earnest money. Here in Florida, we call it binder. I know some people call it good faith deposit. Whatever you guys call it, we traditionally have to turn that in between 3 days after we go under contract. Now that's between, sometimes it's $500, sometimes it's $1,000, depending on what the sales price of the house is. And that is negotiable, right? That's negotiable between the buyer and the seller. So if the buyer say, hey, Kenisha, all I have is $500 to give towards the binder, we can write that up in the contract, but please understand the seller has the option also to come back and say, hey, no, I'm not accepting $500. I want $1,000. And the reason behind that earnest money binder is you, the buyer, saying, hey, seller, take your house off the market for me. I'm serious about purchasing this house. And in the event, if I just so happen wake up one morning and say, hey, the sky is falling, I no longer want this house anymore, seller, keep that binder, okay? If I am out of my due diligence period, seller, keep this binder. And what we mean about the due diligence period is traditionally we ask in the contract for some inspection days. Now during that inspection days is what we call your due diligence period, where I will advise you to check out any insurance for that area, hire yourself a home inspector, and with caveat and with that, the home inspector, that's another cost that's throughout the transaction. So meaning you'll have that earnest money or binder money, you'll need inspection monies, and that's traditionally about $300 to $600 depending on the types of inspections you get. So you have your overall inspection that most people like to get on the house. Then you have your mandatory inspections here in Florida, which one is called the WDO, which is wood destroying organism, which a lot of people call the termite inspection, right? And then we also have what is called your wind mitigation and your 4-point inspection. Now those ideally are for your insurance companies, because of course it's no secret we do have those hurricane threats here. We do have some wind that come about here. So therefore they want to make sure that that roof line is really attached, right? So the wind mitigation and the 4-point. And then also, guys, we have what is called the appraisal that the lender is going to order later on down in the transaction. And that fee is traditionally about $400 to $600. So if we're planning according to what your inspection is going to be, what your earnest money may be, and what your appraisal will be, I will say to start that transaction, we're going to need about $2,000. So $2,000 for your in-transaction fees. And then according to whatever your loan type that you're going to use, use, whether it's going to be a FHA or a conventional, will determine the amount of down payment you may need. All right. Closing costs will be factored by your lender. Your lender will give us a number according to what their costs are for your closing costs. All right. So guys, yes, we do need money when we're purchasing a home. All right. But moving right along, once we get that established and we're like, hey, we need X, Y, and Z amount of money for our in transaction, our down payment, and our closing costs, then we'll move forward, guys, with getting you with the lender to then go ahead and get you a pre-approval. Now, I don't traditionally take people out looking at homes, guys, because let's face it, what are we going to go look at if we don't have a pre-approval? A pre-approval is very, very detrimental to us being able to write an offer. Here in Florida, they don't even accept offers without a pre-approval letter. If you're telling me, hey, Kenisha, yes, my credit is good. Yeah, I have a great job. I'm going to let you know, hey, guys, let's go ahead and get over to the lender and let's get you pre-approved. That way we have a stamp of approval of, okay, yes, we can go out and shop for $200,000 home, right? And once we're out there shopping for those homes, guys, we have that pre-approval letter. So when you're ready to write a contract or an offer, I can go ahead and submit that in with it. Moving on to our next step, step 2, we're going to find your home. So now that we have that pre-approval, guys, we're going to start looking for homes. So you would tell me, hey, Kenisha, I like a 3-bedroom, 2-bath, don't like HOA, or you may say, hey, I do like a HOA governs community because I want my neighbor to keep their grass up. I don't want to come home and see a broken down car in the front of my yard. So I get it and I understand that, okay? So you let me know what you want. What area of town are you most interested in, right? And what monthly payments do you want? A lot of times we're searching online, guys, and we're seeing, oh, this $250,000 house looks great. This $300,000 house looks great. And it does. But then we face the fact of when we do the numbers, you're like, oh no, I wanted to stay around 1,700. I wanted to stay around 1,800. So therefore, guys, I always lead with what is your monthly amount that you want to stay around? Because from there, I'll get with your lender and see, how do we equate this 1,700 into a sales price amount? Because then we have to factor in what the potential taxes will be, what the potential home insurance will be, if there's an HOA or if there's a CDD, whatever other fees are with that community. We need to see what all that is to now give you a monthly amount, right? So from there, I'll do a search in what's called the MLS, where all the agents, we put all the homes that we're listing on the market, we put it inside the MLS, and from there, I'm able to send you out these homes, and as soon as any come on the market that fits the description that you told me that you want, they're sent out to you. And then from there, guys, when you say, hey, Keneshia, I am interested in 123 Main Street, I say, okay, I'm going to schedule the appointment for us to go out and visit and view this home. Now, I'll coordinate with you on your schedule. I have to coordinate with the seller's agent as well to make sure that our times are conducive. And once we go out to view this home, you check out it. You tell me, hey, Kenisha, I do like this, or this is not exactly what I'm looking for. It looked fine in the pictures. We get that sometimes. It looks fine in the pictures, but now that we're out looking at it, I don't too much like that. That's fine. We will continue to look. Once we do find a home that you say, hey, Kenisha, I am interested in this property, then we will get ready to write the offer up for you. What does that look like? So I'll do what is called a market analysis of that property and that community and see what a fair offer would be for it. But guys, I like to also let people know when you're writing up an offer, we cannot just think about just the price. We have to think about the whole equation, meaning that you have a closing date. Whether or not you do have funds saved up for all your closing costs. Maybe you have, you need $7,000 in closing costs, but you actually have $5,000 saved up. Are we asking the seller to help us with those closing costs? If that's the case, we have to think, hey, this may be a factor that may cause the seller to say, hey, I can't go with this offer. So we need to think about different things that we can put in there to make our offer more enticing. Maybe we could say, hey, instead of 40-day closing, we could do a 30-day closing. Maybe instead of asking for the full $7,000 in closing costs, we could say, hey, seller, can you help me with $3,000 in closing costs, right? Things like that also entices the offer even more, right? And so once we get a great offer written up, we submit that offer over to the seller agent, and We negotiate it. We may go back and forth. They may accept it. They may counter your offer, or they may reject your offer. Depending on what they select or what they choose to do, we will move forward accordingly. If they counter the offer and the offer comes back to us, we have the opportunity then to counter the offer. So we're not just like sending our offer in and whatever they send back we have to accept. No, you have the opportunity to counter that seller's offer. Now let's say now moving right along, we're in agreement and we have gotten under contract. The next step, guys, that I have here in this book is post-offer tasks. That's where I was letting you know for like the home inspection, the appraiser, the title company will be doing for you during this post offer. So with the post offer, you would have selected your due diligence period, where traditionally it's about 10 days, and you go ahead and you hire that home inspector to come out and inspect the property. Like I told you before, you can do the full inspection, or you could do those that are mandatory for your area, all right, and according to your loan type. Once you get that home inspection completed, you'll get a report from the inspector. We will go over that report together. If there's some things on there that you say, hey, Kenisha, I would like to ask the seller to repair these things, we send in what is called an amendment, asking the seller, hey, seller, could you please repair these items? The seller does not have to repair anything. I like to tell people that up front. I don't want you to think that just because I sent in these offers, the seller is obligated. No, there's an option. Therefore, that's why you have your inspection done in this due diligence period, just in case if the negotiations during this inspection period don't go in favorable to you, you have the option to terminate and receive that binder back. So as long as you terminate in your windows of termination, like your due diligence period, you will get that binder back. All right, now let's move forward. You have negotiated those repairs with the seller. You guys are in agreement. We will alert the lender to go ahead and order the home appraisal. So then we'll get the appraisal completed. It traditionally takes up to about 10 days for the appraiser to go out and get that done. So as soon as we can get the home inspection completed is as soon as we need to alert the lender so they can go ahead and get the appraiser ordered. Once we get that appraisal back, as long as it appraises at value or above value, we move seamlessly through the process. Now let's say, for instance, the home does not appraise at value. Then guys, we're back at a negotiation window where you, the buyer, and the seller need to say, hey, this appraiser came in $5,000, let's say $5,000 below what the asking price or the sales price was. Now you and the seller can say, hey, seller, can say, come on down, I'm gonna come down at $5,000. So instead of $200,000, this house, I'll come down to $195,000. Or you and the seller can say, hey, let's meet in the middle. I'll send in $2,500 to bridge the gap. The seller can say, hey, I'll bring the house down $2,500 to bridge that gap. Therefore, we're at appraised value of $195,000. We're at a $195,000, but then you guys brought the difference to bring it to that $200,000 if for some reason you wanted to keep that number at $200,000. Or if the seller does not agree to go ahead and get the home or does not want to come down on the value, you, the buyer, then have the option to terminate the deal and receive your binder back. Because what I do inside of our contracts is we have verbiage in there that in the event that the home does not appraise at value, you can terminate the contract and receive your binder back, right? So that's another one of those windows that I say you can terminate and receive your binder payment back, guys. So moving right along, the title company will also be simultaneously running title search. And you know, the title search is making sure that no one else besides these sellers are currently on the title. And also you're going to get what's called a title insurance for in the event after you close on the property. If someone comes from way back when and say, hey, I am the true owner of this property, then your title insurance will be there to help you fight this litigation, okay? Or fight this problem that arose with your title, okay? And moving right along, step 4, look at that. We're almost to the end. We're almost to the end. I told you it's not a hard process. And now we're doing our closing prep, guys. And on here, I have homeowner's insurance. I have changed that address and those utilities over, honey, because you're getting ready to move into your new house. And then start packing. So your homeowner's insurance, although it says that right there, there, I like to tell people do that in your due diligence period, guys, because let's say, for instance, you're in a flood zone. And right now in Florida, we have been having some difficulties with insurance companies. So therefore, if you know that during your due diligence period, then therefore you're able to still just terminate and get your binder back. But in the event, if we do wait a little longer and let's say that problem does arise, then there is a way for us to come out of the contract because of that, because your lender is not going to be able to move forward in the transaction without insurance. We have to have insurance in order to close. So I will always advise you to get that look into during your due diligence period. And now moving on to step 5, you're going to be attending your closing. Pretty much, we're there. We're at the closing. Because by the time the appraiser comes back and we come back at value, the file then gets sent to what is called the underwriter. The underwriter is going to scrub your entire file from when they pulled your credit. They're going to pull your work history. If there was any negative items on your credit report, they're going to ask you about it. If you had a divorce before, they may ask you for your divorce decree. Please be patient. I understand during this time is when a lot of people get real frustrated because the underwriter is going to scrub everything. And I like to let you know that in advance, that they may come back and say, hey, I need this document. And it may be days before closing when you're thinking that everything is done and over with. They may say, hey, this just popped up and we need answers for this. Or the award letter or the gift letter that I was telling you about in the beginning, that if your family member loans you any money or gives you any money, the lender more than likely is going to need a letter from your family member discussing the loan or the gift that they gave to you. Okay, so just letting you know this in advance. All right, and so then once we get that clear to close from your underwriter, guys, that's pretty much it. And then from there, I will tell you, when you show up to the closing table, you make sure you have your up-to-date license, have your name up to date according to what all our documents, our contract, whatever your loan document, whatever that name is that's on there. Please make sure that your ID states that. I deal with a lot of military, active duty, and veterans, and sometimes their spouses overseas or something like that. You can always do a power of attorney. And if we're going to do a power of attorney, guys, I need to know that up front, because we will need the original document at closing. And also the title company can help you with that power of attorney if we need to do a power of attorney. That way we're not running around like chickens with our heads cut off at the end of the transaction. We have these documents up front, so then when it gets to the closing time, you get to just celebrate. All right. So if you have a power of attorney that someone needs to sign for you, you're out of town, you're not in the area, let us know that you're going to need that up front. That way that could get taken care of. And guys, when you come, just get ready to sign. There's going to be a lot of documents, a lot of what you've already saw before throughout the transaction, like your application, your credit report, and things like that. Now they just need you to physically sign it, because a lot of times we do a lot of things electronically nowadays, and so they need a wet signature, is what they call it, at your closing. And throughout the transaction, guys, that's why it's so important to have your real estate agent with you. That way you can ask the questions. Everything I've talked about today, and even with you getting your buyer's guide here, you still may have some questions. I like to tell people that, no two transactions are the same. I understand that mom and dad, sister, friend have purchased a home and they're giving you their experience. You now have to have your own experience. And unless you're buying in the same neighborhood, the same time, the same house, the same owners, your transaction is going to be different. Your credit does not look like your mom and dad, your friends. Your credit is your credit. Your work history is your work history. So therefore, there's going to be differences throughout the transaction. You understand? So therefore, with your real estate agent and a trusted mortgage lender, hey, this transaction should be as smooth as possible. All right, guys? Once again, this is Kenisha Haye, and I am here with the real tea about the home buying process. If you or someone you know is looking to purchase a home here in Jacksonville, please reach out to me. I am available to help you with your home purchase endeavors, all righty? Whether you're doing a VA loan, an FHA loan, or a conventional loan, I am vast in all three. Reach out to me. Telephone number is 254 449-5299, and I look forward to working with you.